Potential free money when it comes to buying your first home? Doesn't that sound exciting? Well, in this video, we're going to talk about a new grant that is available for Pennsylvania first-time home buyers known as the Kfit Grant. But first, a huge shout out to all my friends over at All Things Real Estate for hooking me up with this hat, which, well, I wear everywhere. So if you're interested in some really cool real estate swag, hop on over to their website and check things out. They even have some really cool marketing things to help not only realtors, but also help potential for sale by owners. Now, before we get into this week's video, a little bit of house cleaning. I'm Chris Nelson with Keystone Realty, and this channel is all about real estate advice, tips, and tech. So if any of that excites you, you're in the right place. But do me a favor, drop me a comment, hit that thumbs up, consider subscribing, and mash that bell so that you're notified of my future content. So you're a first-time home buyer and you're looking for a little bit of extra buying power. And if you're in this real estate market in 2021, the more buying power you have, the better. This is a brutal, cutthroat real estate market right now, and it's really tough on buyers. So today I want to talk to you about a grant that is available specifically here in Pennsylvania. And again, it is known as the Kfit Grant. Now, what exactly does that stand for? It stands for the Keystone Forgivable in 10 Years Loan Program, and it is available specifically through PHFA. And PHFA is the Pennsylvania Housing Finance Agency. And PHFA stands for the Pennsylvania Housing Finance Agency. I think they were established years ago, somewhere back in the 70s, to help promote homeownership. So what exactly does the Kfit program do? So the Kfit program provides assistance to qualified first-time home buyers in the form of a grant which can be used towards either their closing costs or their down payment. Now that's one of the really cool caveats with this particular grant, is because not all grants allow for you to use the money towards your down payment. Most grants allocate funds towards your closing cost. So we can dig deeper into that, or you're more than welcome to reach out to me and schedule a time to talk so we can actually go through that and help you understand exactly how those grants work and how these funds can be applied. Now, the way it works is when you settle on the home, a second mortgage is going to be recorded, and that second mortgage is in the amount of the grant that you qualify for. And it is forgiven at a 10%, which is why in 10 years it's paid off. It's amortized over 10 years at 10%. So at the end of the 10-year mark, that loan will be completely forgiven, which ultimately means that throughout the 10 years, you don't have to make any payments on that loan, nor does that loan carry any interest. So the big question is, who qualifies for this grant? Well, in order to qualify for the grant, there are some things that you need to be aware of. First, you need to be a first-time home buyer. If you've purchased a home before, or even if you have a home that you have inherited and a home is deeded in your name, well, chances are you're not going to qualify for this particular grant. As a matter of fact, you may not qualify for a majority of grants because they are designed to help people who do not own homes, hence a first-time home buyer grant. The other thing that borrowers will need is a minimum credit score of 660. This is a golden rule. It doesn't matter if you can get approved for other types of loans with a lower credit score. If you do not have a 660 credit score, you will not qualify for this particular grant. So make sure that you're zeroing in and doing everything you can do to improve your credit. If you haven't seen my previous video on tips to help increase your credit score, well, I'll link that somewhere in here as well. The other caveat is that this loan applies to low or moderate income buyers. So if you have a really healthy income, chances are you may not qualify for this grant, but hopefully you don't need the grant and this money will be allocated to those who actually will be able to benefit from it. So keep in mind the credit score and your income are two big parts of determining whether or not you actually qualify for this grant. The other caveat is that this grant is only available in conjunction with PHFA's loan programs. Now, keep in mind, when it comes to PHFA, they do offer all types of home loans, including conventional, FHA, VA, USDA, and some other options. Now, if you are using or you are approved for a VA loan or a Rural Development Loan, also referred to as a USDA loan, those loans generally are 100% financing loans, meaning that you do not have to put any money down. So in this scenario, if you had one of those two loans, your grant can only be used towards your closing cost. But if you have conventional or FHA, again, you can either use that money towards your closing cost or your down payment. Another requirement for the borrowers is that if you have more than $50,000 available in liquid assets after you deduct what you would be financially responsible to close the loan, well then you wouldn't qualify for this grant either. To put this in simple terms, if you had $60,000 available in liquid assets and you were only required to bring $7,000 to settlement to close that loan, theoretically, you would be left with about $53,000 in liquid assets. And per the guidelines of this grant, you would not qualify because of that. But using that same example, if you had $60,000 and you needed $11,000 to close the loan, well, then you're left with $49,000 and you actually meet the requirement. So it's important to make sure you know exactly how much liquid assets you have available, because it's not only the money that you have in your bank, it could also be subject to things like your 401k. And the last thing is that a borrower must complete a homebuyer's educational course. And this is pretty standard when it comes to grants. Usually these are our face-to-face meetings, but since the pandemic has come and reshaped the way we conduct business, a lot of these courses or counseling services can be done online. However, the important thing is you need to meet these requirements before you go and make offers on a home. If you go under contract on a home before fulfilling all of these obligations, you will not qualify for the grant. So it's very important to make sure if you're going to be using or intend to use one of these grants, make sure all of these prerequisites and your homework is done in advance. So now I'm going to give you a scenario on how much money this grant may actually give a home buyer. The way it works is the borrower can get up to 5% of the sale price or the appraised value, whichever one is less. So if you were buying a home for $215,000 and that home appraised for at least the sale price or more, well, you would be able to get up to 5% of that, which equates to $10,750. And again, that could be used towards either your closing cost or your down payment. And in this situation, if a borrower did buy a home at $215,000 and actually did utilize and take the full 5% or $10,750, every year, 10% of that would be forgiven. So $1,075 would be forgiven every year that you stay in that home and keep both of your loans. The reason I want to point this out is because, well, if you are planning to move in 5 years or 7 years, you still may be able to use this grant, but keep in mind that you're only going to be paying off 10% per year. So 5 years down the road, you would have paid off somewhere roughly around $6,000 of that borrowed money. The key thing is right now we're in a market where homes are appreciating quite rapidly, and they're going to continue to do so for the next year or two. But what if the market changes and now values are not as strong as they were and you lose some of that equity? Well, if you plan to sell your home in 5 or 6 years, it's important to understand those numbers, because although this is a great way to put you in a home, depending on how the market shapes up over the next few years, it could also be the reason why you don't have enough equity to sell your home. So at the end of the day, these are very good tools and very powerful tools when it comes to putting people in homes. But it's even more important to understand all of the pros and cons and use that when you are figuring out what your game plan is, because the last thing you want to do is buy a home, use this grant, try to sell your home, and come to find out that you can't. So there you have it, folks. There, in a nutshell, is the K-Fit program that is available for first-time home buyers in 2021. If you're interested, there is a link directly to PHFA's website where you can get more information on this grant, as well as their home loans. And if you are interested, you can even take a step further and go ahead and apply for a PHFA home loan, which would get the wheels turning. So hopefully you have found some value in this video. And if you have, do me a favor, drop me a comment, consider subscribing, and mash that bell. Don't forget to check in next week for the very next Just the Tip Tuesday with Chris. Until then, take care.